welcome to this week's Fireside Chat with Jesse. I am joined today by Lyndon Thompson, President of Byline Financial Group. Thanks for joining me, Lyndon.
Well, thank you, Jesse, for having me, and congratulations on your recent 100th episode of Fireside Chat. So I'm honored to be
Thank
here.
you. So this is episode number 103. So thank you for that. Thank you for that. And it looks like a beautiful day in the greater Chicago area behind you there.
Yeah.
So
no snow yet. As the rest of the world braces for hurricanes, no snow yet. It is cooler here today, but we'll take that. We're in for a good stretch of weather.
Just promise me that you won't text me any bad juju once that finally hits, because then I would feel bad. But
no, I won't. I will not do that to you. I'll send you some bottles of water.
Fair. Hey, we could use all the water we can get here in Arizona, sir.
Yep.
Lyndon, for those people who might not be familiar with yourself, do you mind just giving a little introduction in your career to date in equipment finance?
Yeah, I'm going to kind of date myself here. I started in this business 35 years ago. It was 1987, and I started, of all places, in Cedar Rapids, Iowa. It's kind of the mecca for leasing outside of Moberly, Missouri. So I worked at a company called Lease America, and a lot of great people, a lot of great industry veterans have come out of Lease America, and they're all over the country. And that's made the equipment finance interesting and fun for me throughout the 35 years. It's good resources to lean back on and to just get feedback for things that we're doing in the industry. I've moved around a total of 9 times, moved my family, and been all over. Been to Dallas, Texas, been to Atlanta, Georgia, been to Canton, Ohio, in and out of Iowa several times, and been here in Chicago for 22 years now. So it's been a good career and a good span so far. I'm looking to stay on a few more years, as long as Byline Bank, the owner of Byline Financial, allows me to stay. So it's not work when you're having fun, right? So we're having a lot of fun. So
that's good. And from the group that I know that you work with at Byline, it's a fun group that you had joined. So
I'm very fortunate to have an extremely talented group of individuals around me. Some of them I had when I came to this business, and some of them I've been able to bring with me. So that's been a good key as well. Like our attorney and our head of our sales group, and a few other folks that we have here.
So before I get into a little bit more about Byline, just wanted to circle back. So Lease America, is that what you said?
Lease America, yeah, back in 1987. Okay. It was a smaller company owned by an insurance company in Cedar Rapids, and we were able to the Aegon Insurance Group owned it at the time, and they put it up for sale, and then was sold to GE, and then I stayed with GE for a little bit, and then that was my Canton, Ohio experience, and then ended up leaving. They wanted me to move from there, and I didn't want to go where they wanted to move me to. So I moved to, of all places, Waterloo, Cedar Falls, Iowa. So, like I said, I've been in and out of Iowa a couple of times, and stayed there for a little bit, and then came to Chicago.
And then I wasn't sure if because I think of Cedar Rapids, I think of Great America, right? Like,
Tony Golovic. Tony came out of Lease America. So
I wasn't sure if they acquired them or not. So, or he started from scratch.
Tony was with Lease America at the time, and then he went out and started his company. I believe it was '93, and he's been successful and good ever since then.
So of those 9 different times you had to move, did your wife ever sit there and say, "This is the last time"? Or
8 times ago, yeah. 8 times ago, yeah. It's honey, we're moving. No, it's like kind of like the Beverly Hillbillies.
Oh, come on.
Loading up the truck, and we're moving to open your arms. We're moving to Canton, Ohio. We're moving to Atlanta, Georgia. We're moving to wherever. But no, Chicago has been our home for the last 22 years, and it's where we'll probably end up staying for the rest of our lives. We'll probably get another place somewhere else, but that's in due time. So.
Nope. Fair enough. So I had to ask that question. Sorry.
Yeah, that's fine.
So as far as Byline Financial Group, do you mind just kind of giving a little overview of the
Sure.
current company that you run, sir?
Yeah, I came here in 2018. I retired from Wells Fargo, and they were looking for a president here, and I came on board as a president. And it was the middle of 2018, and we were a smaller company at the time. We probably had 22 people, I believe, at the time, and we were probably running $200 million, 180 to 200 million net book. And came on board here. They were primarily in the healthcare arena. They had some other ancillary equipment that they were financing, and I came in and we kind of turned it around, and we're not emphasizing healthcare near as much. We primarily operate in the material handling space and the compact utility space. We do have some of that healthcare. We do also get into some technology where we'll finance some computer systems and some servers, and then we definitely play in the space of portfolio acquisitions. We work with a number of lenders with risk sharing, and just also making room for some of their programs. And we were doing that at Wells Fargo, so a lot of these things kind of line up with the same things I was doing at Wells Fargo. So a lot of growth. I've been very fortunate, in my career to have, so to speak, caught lightning in a bottle 3 times. I've been with 3 different companies that have had extremely explosive growth. And one was in the durable medical equipment industry. We grew a portfolio to a size, and it was later acquired by TCF. And then obviously when we started it was Baytree, or not Baytree, Byline Financial, or not Byline. Stop again. All right, let's back up. I have too many B's in my career, Jesse.
Hey, it's okay. I can help you. Was it Greater Bay Capital? Was that
Greater
what it
Bay
was?
Capital?
There we
Yes.
go. There we go. That's where we met.
So let's back up. So I've been fortunate to have caught lightning in a bottle for 3 times. The first one was with a company in Waterloo, and it was the home healthcare industry, and we grew that, and it was acquired by TCF. And then we came over here and started Greater Bay Capital, and that grew extremely quickly, and we ended up selling that to Wells Fargo. And then when I came over here with Byline, we've been able to have substantial growth ever since I've been here. So the markets that we participate are, high growth markets, and they're solid collateral. And I've known it for 22 plus years. And it's been very, very good markets to operate in.
Well, you're a very humble individual, Lyndon. However, the one constant in those 3 organizations, or now your 3rd one, is you leading the organization. So you need to give yourself some credit there, sir.
Well, thank you, but it's not. There's no I in team. All right. I've got some really good individuals that I work with, and that I have worked with for 20 plus years. And you hear a lot about the cliche about family. That is a real thing here. The folks that I work with are like family, brothers and sisters. One of the things that we are very successful at is minimizing weaknesses and maximizing strengths, getting the fullest potential out of our employees. And I try to encourage them, with just small things. Lunches, donuts seem to be a real hit. So those are good things.
It's fantastic. And, so I wanted to talk real quick about being acquired by a bigger bank. Because obviously the M&A stuff, it's slowed down a little bit, but not really. As these interest rates continue to go all over the place, there could be some more consolidation. As a leader of an organization, when you're acquired, what are you telling your team?
what's that phrase that Europe used to use? Remain calm, something to that effect.
Oh,
Just remain
on
calm.
airplane, or no, that was Animal House. I think it was that Kevin Bacon. It's like remain
Yeah,
calm, remain
could be
calm.
remain calm. That's what. Don't panic. Don't go to extremes just yet. I mean, a lot of times, I've been acquired a number of times, and a lot of times it's don't panic, remain calm, and let things kind of shake out. They didn't buy us to shell us. They bought us for a reason. There was goodwill recognized, and what they want to pay back on that goodwill, and we're here to do that. I tend to not look so much at the negatives, but I keep the negatives in the back of my mind, and I
Good way to look at
concentrate
it.
more on the positives. And hey, we want to move this forward. You don't want to be necessarily the follower. You want to be the leader. And I'd rather be out front driving the business versus behind it, just riding the bus. Forget, that's no fun. And it is all about having some fun. And we do have a tendency to do that here occasionally. So I think, again, I've been acquired a number of times, and having gone through that, I've been successful in negotiating that, and then also being a leader coming out of it, and being successful while doing that. So kind of a key thing to keep in your mind is to just remain calm and positive, and move the ball forward, and let's get our jobs done, and put numbers up that are posted so high that others can't obtain them.
That's perfect. The only challenge, like with being acquired by a bank, like with the regulators and everything else, like
Yep.
the fun, that's the fun police, right? Like,
Yep. So I always used to have this adage here that, as an independent, you pay a little more for your cost of funds, but you don't have the regulations. As a bank, you don't pay as much for the cost of funds, but you have the regulations. So you still have the same whack across the board of, it's going to cost you 3%, 2.5%, 3%. You pick the dial. Where's the dial? Because the other half is regulation, or the other half is interest. So you pick the dial. Having been in both places, it is definitely true. And to your point earlier about acquisitions, we have seen quite a few, and we've looked at quite a few, and a lot of that was driven based off the speculation that interest rates were going to go higher, and it was going to become more difficult for independents to really make money as the squeeze play has been transpiring.
where do you see that shaking out?
From our standpoint, the edict has been to grow. Again, we have looked at a few companies, and there seems to be bigger fish or whales in the pond right now, and for smaller players, that premium just doesn't make sense. I do think that we'll see some more of that show up here in the near future.
No,
So
that's perfectly fair.
pay attention.
But trust me, we're sitting there trying to figure out, okay, what's the next domino to fall, with all these rates going up, especially if people don't have their documents in order, right? Because you're sitting there placing medical equipment orders for like 18 months out, and what was that rate 12 months ago compared to when the equipment's going to be delivered?
Well, and we've seen that in our industry pretty severely. A lot of components for a lot of our manufacturers are not onshored, they're offshored, and some of those have been a struggle for them to get. And it's been kind of interesting, because you've kind of see that tide kind of change a little bit on the supply side, is starting to open up a little bit, but it's on the labor side. They can't get, you can run one shift, you can run part of a second shift, you can't go to a third shift to fulfill the finished product to be delivered to the customers. And we have seen some of our lead times come down a little bit, but they still are extended, and we're trying to define what is the new normal once we get to that. It's still a moving target at this point.
Well, and also on the material handling side, right? I mean, we actually moved into this house March of 2020. Great timing, right? Nothing going on in the world at that time.
No.
And I think of trying to build a house like this in that time was a pain, trying to get the supplies. So on the material handling side, seeing all these other houses go up around us now, it's like a slow process. Is that supply chain opening up a little bit more, Lyndon, or is it still stressed?
For us, it is still stressed. We are seeing some movement to finished product, and I honestly think that here by the end of the fourth quarter, I think you'll start to see that open up quite a bit more. I think. I hate to say this, but I looked at what the Fed just did, and you were thinking 25, 50, 75. I looked at 25 as a glancing blow. 50 was a direct hit, but 75 knocked you down. Okay. And I think that's the 75 basis point change that they made is going to knock a lot of people down and force people to rethink their equipment acquisitions. And I think that you'll see some orders canceled and just delayed until another time, which will allow manufacturers to kind of catch up. Yep. And then they'll have their inventory in place for when the customers are ready to take on more inventory or more material handling or healthcare or compact utility equipment.
Now, do you see more because I want to say maybe for like the last at least 8 years, the shift was more loans compared to leases, just based on lower rates? Do you see leases making a comeback?
Right. Historically, and prior to coming here, there were some accounting changes that took place right before I left, and those accounting changes shifted the purchasers from an FMV lease to a loan. And we might have been running in the 55, 60% FMV business to 40 to 37, something like that. And now it's more 50-50, maybe even 55 loan, 45 lease. So we have seen a little bit of a pullback in respect to the type of lease that the companies are picking up right now, or financing, let's call it that.
Yeah, I know there's been some other states where it's like, no, a buck out lease needs to be, a loan. Oh, yeah. It's just some of this disclosure stuff that's coming is just kind of like,
Yeah, I'm gonna watch that one on the California disclosure that I just saw you posted that one, so I'm gonna watch that one because we're paying real particular attention to that.
I would think in Illinois you would be.
A bank. Yeah,
I would think in Illinois you would be. I mean, I think Utah's just passing something now. They said that there's 9 other states, yes. So hopefully they're adopting more. I mean, if you have to go to the lesser of two evils, like New York is like extreme, and then California, believe it or not, is not as extreme as New York. I think they compete, but I don't know.
Well, the old adage is what happens in California does not stay in California. It just sweeps.
I live in Arizona. It's like, don't California my Arizona. Come on.
Exactly. Well, ask Texas. Ask Texas about Californians moving there, but that's neither here nor there. But but that is that is true. What happens in California does not stay in California, and it's just more like brace yourself and and go from there. There's nothing else you can do because it's out of our hands.
Nope.
We can lobby all we want to with the states, and they've got their mindset that that's what they're going to do, and they go from protecting the consumer to protecting the business owners, and you can understand that transition. Yeah. And it's fair. So
absolutely, yeah. I mean, it's just at what level of fairness do things need to be over, like not over complicated? Like,
where's that pain point, right?
Well, the good thing is as a bank, maybe that stuff won't affect you. But anyhow, yeah, listen Correct. To that. That disclosure stuff was it was, for me, I'm a layman when it comes to that stuff, as you can imagine. But understanding what's going on and kind of asking questions, it was a good conversation.
I will definitely be watching that. Robert and I will.
So I know I am assuming that our paths probably first crossed at an ELFA event somewhere in probably the mid 2000s. Yep. So kind of wanted to talk about like the trade associations, Lyndon, and what they've meant for your career.
Well, especially the ELFA. Like I said, I started in leasing in 1987, and that's when Mike Fleming was very entrenched in the ELFA. And the head of Lease America at the time, his name was Emmett Sherman, and Emmett was very involved with the ELFA at that time, and kind of got all the employees to understand and to utilize the ELFA. And I think with the time and the advancement of technology, it's become more and more available to You mentioned the term layman, but not only to myself, but even to my people. Well, they'll go out and they'll check the ELFA website for, taxes or, just other things that are happening in the leasing community. And to make that so accessible for those people, it's been a win-win to get the ELFA name out there. We go to the accounting, the operations, we support that. We go to the annual as often as they have it. With COVID, we had a couple issues, but we're very much a supporter of that, and we go and we look for the people that we do business with, refresh our relationships and also make contacts with others. And I believe I did end up meeting you one time with Oscar at a meal, and I was kind of amazed at how much you ate. I'll be honest with you. Okay, I was like, "Holy cow, you and Oscar!"
hey!
I shouldn't bring that up.
at least you said ate, not drank. So I appreciate
That's correct.
I appreciate that.
That's correct. It was an eating place. No, I believe that's where we first met, and then you came over when we were at Greater Bay, and we talked about OSG at the time. So maybe we shouldn't bring that up at this point, but we didn't go to it at that time, but we are OSG users now, and I believe that you probably sold that relationship to I want to say Bay Tree, which is now Byline Financial Group, and we are grateful for OSG because they do help us in a lot of respects. So
yeah.
Go ahead.
No, then I acquired you as a customer for my 10 years when I was at LTI. So
yep, exactly. And again, the ELFA has been, is so supportive of the other leasing groups, and it just makes it a great forum to go and to meet others, and again to renew your relationships with people that you've done business with. As I've mentioned, 35 years in the business, I just know hundreds and hundreds of people in this industry, and it's a great industry to be a part of. And I know you work with some other folks in part of our job is to bring underlings up underneath us and to challenge them to rise to the top, to be leaders in this industry. And that's one of the things that we really need to concentrate on. So
absolutely, we need those replacements for sure, because I would like to go away and eat more. So
not drink, eat.
no, just food.
That's
just
right.
food. Just food.
That's right.
Who says a martini isn't a meal, Lyndon? So.
Yeah, exactly. Throw enough olives in it.
So I ask everyone who comes on here to give me a little fun fact about themselves. Anything that you wouldn't mind sharing with the audience here?
Right. I got a couple of fun facts about me. I am a cancer survivor. When we first started Byline, or not Byline, Greater Bay Capital, I was diagnosed with cancer, and I survived that. That was 20 years ago, and that's been a good thing. I'm kind of a ball nut. Anything to do with a ball, a golf ball, we'll start with that, a racquetball, a baseball, and a football. Huge Bears fan, being here in Chicago and growing up around the Chicagoland area. But one bad buzzkill on me is I'm a huge St. Louis Cardinals fan, and I have broad shoulders, and I wear that proudly, especially here in Chicago, and especially since my wife is a big Cubs fan.
It's a point of contention. You're just like, well, the Cubs are never going to win ever, and then you're like, oh.
Well, I try to tell her that, but she doesn't like to listen to that. And the last thing is, I love my family. I have 4 kids all over the country, just one here locally. The rest are around the country, and I have 4 grandkids. So my grandkids are going to be 5, 4, 3, and 1. So they keep us busy, and they're not here. One's here, the others are other places. So we like our family. So
that's fantastic, Lyndon. I did not know any of those things. So thank you for sharing. And I guess kind of in closing here, why do you business with Byline Financial Group?
Well, I like to think we run under a couple of different mantras. All right. One of them is KISS, keep it simple, stupid. We don't try to overcomplicate it. We're just straight up I like to refer to us as leasing folks. You want $1 out, you want a 101 out in Florida, you want an FMV lease. The markets that we're in, we've become experts in those markets, so we can set residuals that both are fair and adequate for everybody when you get to the end of the lease. Another one that we run under is speed kills. Okay. The quicker we can make those decisions and get those deals off the street, the better off we are. And my credit team here is, I like to think of them as second to none. They almost rival what our Wells Fargo one was, where we made quick decisions. We don't credit score. We gather information though from the bureaus and from our own knowledge, and we make decisions quickly and get those deals off the street. And we're small ticket leasing. We're probably average trans size about 80 grand. So we execute. We're set up for a flow shop, and my group operations and credit, we're able to handle a pretty good size volume with the number of staff that we've got. And the last one is cash is king. Okay, the quicker I can convert that that approved application to a document, and then to a signed document, and then to cash to the vendors or the manufacturers, that cash is king. The quicker I can get it out and get it employed, the better off everybody is. And we have, I like to think of it, people, well, how many customers do you have? We, Byline Financial Group, service 6 different customers. Okay. We got the manufacturers, we got the dealers, we got the end user customers. Then we also have internal customers, which is our own inner departments here, where, credit, operations, and sales all interact. And then we have our corporate folks that we have to satisfy. And then the last one are the shareholders. And we just, service every one of those with service. We just try to, like I said, we like to answer the bell first. We don't like to let things sit around and simmer. We like to get back to people quickly, so that, because they've got a decision to make as well. So the quicker we can get it back, the quicker they can make their decision, and the quicker we can move on. And that's our whole premise. Again, it comes back to keep it simple. It comes back to that principle. So that's kind of our pitch.
Well, excellent. I wasn't sure when you said KISS, if the band, there's
no. Well, I did like KISS. Gene Simmons, come on,
I mean, it's like, we offer this. They don't have this.
No. I'm not going to wear those high heels. Nope, you won't see that.
I was going to say it. Well, maybe we should put some action on this upcoming week's football game.
Is it Arizona?
No, I'm a Giants fan. So
we play the Giants?
I think so.
Well, didn't the Giants just get pummeled last night by Dallas?
They lost by 7. Yes. That is pummeled. Okay. if you get beat by Dallas. I agree.
Well, yeah. Ezekiel did not help me in my fantasy football. Again, I'm a ball person, remember? Okay.
Fantasy football is
I was real happy when Albert Pujols hit number 700, 699 and 700. I made a comment to somebody, it would be very fitting for him to do that in LA, and it happened. So that was very, very fitting moment. I think it was a great moment for Major League Baseball. So
I agree. They just have to overcome. They have to do something to overcome these new rules that are going to be in play next year.
Yeah, I hope folks from California don't watch this, but that's almost like California happening. Oh my gosh.
Let's make the bases 5 feet by 5 feet. It's like, what?
Yeah, and your infielders have to all have their feet on the dirt on the infield. What happened to the old AstroTurf days? Remember when they used to just have dirt around the bases?
Have you seen?
There was a white line.
You seen the videos about the bananas? I don't know what the league's called, but it's.
Oh yes, I have the Savannah Bananas down there. I have seen that.
That looks entertaining. They're all doing a coordinated dance. I can't dance, but they're all doing it, and then they throw the pitch. It's like, what is going on?
And then the fans, if the fans catch a ball, it's an out.
Yeah, it's fantastic.
They were running that too. That was good. And the guys on stilts trying to bat, you're like, what? And then the guys on the ground, they're trying to pitch to him. Everything's a ball.
But can you have fan interference on another fan?
No,
that's where my mind goes, because I would probably just push him out of the way.
Exactly. You don't want the ball to drop. You don't catch it, right? I don't know, but how many fans want the ball? Ask the one that caught Albert Pujols 700. He wants the ball. So okay.
Might pay for his house.
Exactly.
All
or
right, sir.
more.
Well, I appreciate your time. By the time this airs, we'll have already seen each other in Florida.
Okay.
But look forward to seeing
Yeah.
you down there and appreciate all
Yeah,
your
I do
time
too.
today.
Yeah, no problems. Thanks, Jess, for having me on. It's a great pleasure and an honor, and I'm glad to be number 103.
Thank you, Lyndon.
All right, buddy. Thanks.